Welcome back, Wealth Builders. Thanks for joining. I'm humbled that you stopped by to spend some of your time with me. Today, we're going to talk about how to buy your first stock, step by step. Before going forward, please remember to like and subscribe. As a reminder, I'm not a financial planner, and all investments have risk. But I believe anyone can build wealth over the long term on any budget. A subscriber recently let me know that they're interested in investing, but they don't actually know how to buy their first stock. I can't use his real name, so let's call him Sal. Okay, Sal, this video is for you. I will show you step by step how to buy your first stock. There are some personal thoughts I wanted to share with you first. If you don't already own stock, I recommend you start off by buying some shares in an exchange-traded fund. Because although you won't buy the stock directly, buying shares in an exchange-traded fund allows you to invest in several companies. In doing this, you're going to lower your risk because you're going to be leveraging diversification. What that is basically spreading your risk over several companies rather than one. My advice is don't put all your eggs in one basket. So, Sal, you said you wanted to invest in the video game industry and specifically Sony. The ticker symbol is SNEJF. I actually own Sony stock already, and I really like this company. They have good fundamentals, and they also sell several products that allow them to have a large array of business revenue streams. The price to earnings ratio, again, this is the amount people are willing to pay for the price of the stock divided by the earnings per share. Price to earnings ratio for Sony is 13.71, which indicates it's good value. The net profit margin is also 11.65%. I have to mention, an alternative to this, if you want to invest in the video game industry, is to purchase an exchange-traded fund that focuses on the video game industry. ETF Hero, HERO, might be a good option, again, because it holds many companies in the video game industry and will lower your overall risk. Now that that's out of the way, let's move forward. So your first step is going to be to choose which brokerage firm you're going to use. There are several which charge similar fees, but we live in a world where commission-free trading is the norm. I would stay away from firms that charge commissions when you buy stocks and ETFs because it will dilute your profit. Some examples of firms you can use include Robinhood, Scottrade, TD Ameritrade, and E-Trade. I don't work for any of these brokerage firms, and they're not paying me to say this. I'm not sponsored. I wish I was, but I'm not. I just want to provide you with some options. I'm going to use E-Trade as an example because I personally use E-Trade. No specific reason other than I've used E-Trade for more than a decade. I'm used to the interface, and I just don't want to go through the hassle of transferring all my assets to a different firm. I should also let you know that I also use robo-advisors. I'm a big fan of robo-advisors because they use algorithms to invest in ETFs, and I'll save that for a different video, but I just know that I'm a big fan of robo-advisors as well. So go to etrade.com and click on open a new account. So the next thing you're going to want to do is choose an account type. What account type you choose will depend on what you want the account to be used for. If you want to start saving for retirement and open a Roth IRA, then choose retirement account. If you want to have a general investment account, open a brokerage account. Once you decide, hit continue. The next step is you're going to want to choose who will own the account. If you're a minor, you're going to need your parents to open a custodial account for you. And once you turn 18, you can take over the account. Let's assume you are 18, you will click individual. If you are married, you would choose joint account. Hit continue. All right, next option is to hit new account and continue. Now you're going to have to enter your contact information in the next few pages. Hit continue. All right, so you're going to get to the page where you're going to have to choose your investment profile. What will you use the account for? In your case, you stated growth. You wanted a growth portfolio. But here are what other options listed mean, as everyone's going to have different roles. Speculation. What this means is high-risk investments that have the potential to drastically increase value or drastically lose value. I don't recommend this for you because you're just starting out. Growth. This is probably where you're going to fall in. Investing in companies that are expected to grow above average when compared to the rest of the market. These are companies that won't pay out dividends because they are reinvesting any profit to grow the company. Income. Investment for the purpose of establishing savings to invest in assets that generate an income. Likely, these are companies that pay a dividend or ETFs that focus on companies that pay dividends. Again, this is probably not you based on investment objectives that you listed. Capital preservation. This means investing in low-risk securities, things like treasuries, certificates of deposit, cash equivalents, money market funds. These will not generate much growth, but rather preserve what you already have. So what you're also going to have to do is list your liquid net worth. And what that means is, what are the things that you could sell today easily? These are things that there's a clear market for. Things like cash, stocks, ETFs, mutual funds. These are things you already own. And from that, you'll subtract your liabilities or your debts. So those liquid assets minus those liquid liabilities, that equals your liquid net worth. You're also going to have to list your total net worth. And these are all your assets minus all your liabilities and debts. That amounts to your total net worth. Now, you're younger, and if this is on the lower side, there's nothing wrong with that. I mean, you're just starting your investment journey, so it's normal. I mean, we all started somewhere. I started there at some point. You'll next have to choose whether or not you want to engage in options trading. This is too advanced. Do not attempt to engage in options trading unless you speak with the certified financial planner. Margin trading, again, too advanced. Don't attempt to engage in this. See a certified financial planner to help you with this. Essentially, you're using debt to invest in the market. Don't use margin trading. All right, once you do all this, hit continue. So now you've got to fill out the regulatory questions. The government has laws to prohibit insider trading, and brokerage firms have to do their due diligence to prevent insider trading. Insider trading is basically using non-public information to gain or profit from it. It's unfair and illegal. Hit continue. So next you provide your account basics. How will you transfer funds? Usually a bank account or a savings account. Choose the purpose of the account. There's literally a learn how to invest option. Hit continue. Next, at some point, you may have cash in your account that will remain uninvested. Choose the account type to hold this cash. I use D-Trade Bank. Read the terms and conditions. Hit continue. Next, choose your username and password. Choose your username and password. Don't let little piggy see it. It's private. Log in, and now you'll need to fund the account. Basically, you're going to need to deposit funds into your E-Trade account to begin buying stock. What your brokerage firm will also do is you will need to link an existing bank account you have. The brokerage firm will submit a small deposit, which you will need to confirm in your E-Trade account for security reasons before funds can be transferred. This process can take up to 2 days and an additional day to actually transfer funds. So at this point, before you actually buy the stock, I mean, this is going to be 2 to 3 business days later. So let's assume now you've gone through that confirmation process and you have funds in your account. Now you can actually buy your first stock. Every stock has a ticker symbol that identifies them in the stock exchange. This is what you need to input to find the stock to actually buy it. So again, you said Sony, and so the ticker symbol for Sony, SNE. Now, SNE is actually an American depository receipt. And what that means is that it allows you to invest in the stock traded in another country. The bank saves the stock that is purchased to allow you to invest in the company. You can buy the stock directly. That ticker symbol is SNEJF, but you will likely be charged a commission to do so. If you were investing instead in an ETF, then you would substitute the ticker symbol here. So in the example I gave was Hero, which is the gaming ETF. And this is the route I would recommend. So I got to admit, I could not help myself. I ended up buying 10 shares of Hero. Although I don't have time to play video games, I would if I did. And I noticed that this ETF has Nintendo stock, which I like, as well as Nvidia, which is a chip maker. So I clicked buy next. So now you got to choose what instructions to place on the buy order. And so the action you're going to choose is buy because you're buying. And quantity, this is the amount of shares you want to buy. Since I purchased Hero, I put 10 here. Put however many you would like to buy. There's nothing wrong with starting off with 1 share. This is your first step in your investment journey after all. So if you want to put 1, put 1. You're just getting started. Now, you're going to want to put a market order. What this means is that your order will be placed to buy the share when the market's open for trading. I do not recommend limit orders at this point. You're holding for the long term, and long term means more than a year. Again, I hit market for mine. Duration, it's good for the day. Hit preview order, hit submit, done. Congratulations, Sal. You just bought your first stock. Or hopefully ETF. So, Sal, I hope that gave you a clear step-by-step process on how to buy your first stock. Again, all investments have risk. And if this is your first stock, I recommend an exchange-traded fund because it will lower your risk. Again, don't put all your eggs in one basket. I also recommend implementing dollar cost averaging, which is investing the same amount at regular intervals. Let's say $100 a month to buy however many shares of Hero that can buy. When the price of the ETF is low, you can buy more up to $100. When it's higher, you buy less, but you consistently invest $100 every month. Do this over the next 10 years, and this will prove to be a good strategy to build wealth over the long term. If you want to invest more than $100, that's fine. Invest in alignment with your risk tolerance. Little Piggy was really tired from all that pointing and clicking. They worked so hard. Please hit like and subscribe because it will make them feel better. Thanks again, Sal, for your question. Thank you, Wealth Builders, for watching. I hope you learned something new. As always, I hope you have a great day.